They call me naive when I said Spain's real estate market would become Europe's hottest investment opportunity. They said I was chasing a falling knife. They said the market never recovered from the 2008 crash. But here I am, investing in opportunities that bring me and my fellow investors a 26% annual return from Spain's property market, and it comes without the headaches of direct property ownership. Welcome to my channel. I'm Justina, and I know exactly how it feels to live without financial security. A few years ago, I was a mom of two, sitting there with no savings, no backup plan, wondering if life would always feel this heavy. Paycheck to paycheck, fear of the next bill, stuck in survival mode. But then I made a decision. I will not stay in this place. I learned how to manage my money, how to invest, and how to build the financial safety my family deserves. And somewhere along this journey, I also had to make one of the hardest choices of my life. And I just went through a divorce. Because deep down, I knew if I want to build the life I truly dream of, I just can't keep floating in the shallow waters. I have to fight for it. Today I'm here not only as a mom and an investor, but as a woman who chose to be the hero of her own children and to help other women rise even when the path asks for tough decisions along the way. If you're feeling stuck, know this, there is a way out. And here on this channel, I'm sharing you the exact steps that helped me rebuild my life so you can do it too. Today, I'm taking you on a deep dive into what might be Europe's most misunderstood and undervalued real estate market. Let's get into it. Spain's real estate market has had a wild history. The devastating crash of 2008 saw property values plummet by more than 30% nationwide, creating a skepticism that still lingers in many investors' minds today. But let me show you something that might shock you. That persistent skepticism is now creating one of the most asymmetric investment opportunities I've found in years. One that's perfect for any kind of investor, either a beginner or a seasoned fox. In today's video, I will talk about the economic renaissance driving Spain's property market, regional hotspots where I'm seeing the highest growth potential, the supply-demand imbalance creating pricing pressure, and my personal strategy for generating 50+% returns. Also, how you can participate without dealing with tenants, toilet fixes, and Spanish tax forms. The first thing you need to know about Spain's opportunity is the economic transformation happening right now. Look at the numbers, because they are going to blow your mind. In 2024, Spain's GDP grew by 3%, dramatically outperforming the Eurozone average of just 1.2. This isn't a one-year anomaly. Spain has consistently outpaced its European neighbors for several years now. What's driving this growth? Several key factors that most investors are completely missing. First one is tourism. It has exploded. Spain welcomed 94 million tourists in 2024, generating 128 billion in revenue. And we can also see that 2025 might have 100 million visitors with revenue exceeding 140 billion. This tourism surge isn't just filling hotels, it's creating massive demand for short-term rentals and second homes, driving yields for property owners. Second, Spain's job market is booming. Unemployment has fallen to 11.2%, and while 11.2% might sound high compared to Germany, it represents a dramatic improvement from the 26% unemployment during the crisis years. More jobs mean more renters and buyers entering the market. Third, Spain is becoming a digital nomad paradise. Cities like Barcelona, Madrid, and Valencia are seeing tech companies bring in high-earning professionals who need housing. As someone who understands the power of location flexibility, I'm particularly excited about this trend. Fourth, mortgage rates are becoming more favorable. The European Central Bank rate cuts reduced the average mortgage rates, and hopefully it goes down by the year 2025. And as this trend is expected to continue, enhancing affordability and driving demand from buyers. But here's what makes this economic revival particularly powerful for us as investors. Spain's population grew by 1% in 2024. And here we are talking about the immigrants, and these aren't just any immigrants. They include high net worth individuals from UK, from Germany, from Scandinavia, who are driving luxury market demand. All of these factors are creating tremendous pressure on Spain's housing market. Real estate investment surged by 20% in 2024, reaching 16 billion. Transaction volumes reached 642,000 sales. It is the third highest figure in Spain's history and a 10% year-on-year increase. The result? House prices have risen sharply, with the national average increasing by 8% in 2024, accelerating from 4% in 2023. New-built properties outpaced resales, recording a 10% price surge compared to 8.6% for second-hand homes. But these national averages mask the tremendous regional variations that create specific investment opportunities. So let's explore where the real action is happening. This is where smart, strategic investors like us can find the biggest opportunities. Spain isn't one real estate market. It is dozens of micro markets with dramatically different dynamics. Let's start with the urban centers, which have seen some of the strongest growth. So there is Madrid, capital that has experienced prices hikes of 10 to 13% in prime areas. Madrid's inclusion in the 2025 America's Cup route is expected to boost tourism and investments further. Barcelona, tech firms leased 120,000 square meters of office space in 2024, pushing rent prices in the innovative 22 district. Despite Catalonia's rent control laws, luxury properties exempt from these restrictions continue to see strong price appreciation. And then it's Valencia. Valencia is attracting international buyers looking for value with growth potential. And now let's look at the coastal markets, which tell the entirely different story. Costa del Sol. Prices rose 12% in 2024, with Marbella's luxury villas exceeding 10,000 euros per square meter. The combination of year-round pleasant weather, international schools, and extensive amenities make this region particularly attractive to Northern European buyers. Balearic Islands. Limited supply drove a 14% price hike on islands like Mallorca and Ibiza. Luxury properties here can achieve rental yields of 7.3%, significantly higher than most European markets. But here are also emerging hotspots that sophisticated investors are watching closely. Murcia. Prices grew 9% in 2024, driven by British retirees and solar farm investments. The combination of affordable prices and strong growth makes this an interesting value play. And then there is Andalusia. Cities like Jaén and Cordoba offer yields of 8.9% for rural tourism properties. As remote work becomes more common, these historically overlooked areas are seeing renewed interest. What's particularly interesting about Spain's regional market is the supply-demand imbalance. Spain currently has a housing deficit of approximately 1 million units in major cities and tourist hotspots. This shortage is even more acute. Only 14% of new construction targets middle-income buyers, exacerbating affordability issues in urban centers. This supply constraint is a fundamental driver of price appreciation that isn't going away anytime soon. Construction costs rose by 12% year-over-year, delaying 30% of planned residential projects. Land scarcity is another factor. Only 12,000 buildable plots remain in Madrid alone, necessitating vertical development. Now let's examine the different investment sectors within Spanish real estate, because each offers unique opportunity profiles that align with our wealth building strategies. So what about the sectors? So let's look at the residential sector, which dominates investment, attracting 35% of total capital in 2024. Buy-to-let investors in Spain achieved average gross rental yields of 4.6% in 2024, rising to 7.3% in prime coastal areas like Marbella and Mallorca. Combined with capital appreciation, total returns reach more than 10%, and this is significantly higher than most European markets, making it perfect for our portfolio barbell strategy. What's driving these strong returns? Several factors. Persistent supply shortages estimated at 1 million units, strong demand from both locals and international buyers, raising construction costs, limiting new supply, increasing preference for rentals among younger Spaniards. Now, let's talk about the barriers and challenges in the Spanish market, because understanding this is crucial for our risk management approach. While Spain offers tremendous opportunities, we need to be aware of several challenges and risks to make calculated, not reckless, investments. First, regulatory and tax uncertainties create complexity. There's a proposed 100% surcharge on non-EU buyers that could deter foreign investment, particularly in coastal markets. Catalonia's 3% annual rent cap has reduced investor appetite, with buy-to-let transactions down 18% in Barcelona. Second, climate risks are becoming more significant. About 15% of Mediterranean properties face coastal erosion risks by 2030, lowering valuations in Malaga and Alicante. Water scarcity in Andalusia has halted over 50 golf course developments, affecting adjacent real estate. Third, there are operational challenges. For foreign investors, navigating Spanish bureaucracy can be time-consuming and complex. The language barrier, different legal system, and regional variations in regulations create significant friction for international buyers. Despite these challenges, the outlook for Spain's real estate market remains strongly positive. CaixaBank research predicts 5.6–5.9% price increase in 2025, with a 32% of municipalities exceeding 10% growth. Several long-term trends support continued market strength. Demographic shifts will create new demand patterns. Spain's aging population will drive demand for retirement and healthcare integrated housing. Meanwhile, urbanization continues, with 83% of the population residing in cities, intensifying pressure on urban housing. With this comprehensive understanding of Spain's real estate market, let me introduce you to my favorite way to capitalize on Spain's booming real estate market without dealing with tenants, toilet fixes, or complex Spanish tax forms. And it's called discounted debt investments. And the Indimo platform makes these accessible to ambitious investors like us. So here's how it works. Spanish banks sell non-performing loans at significant discounts. These loans have borrowers who have failed to make payments, but importantly, they include their real estate asset attached to them as a collateral. Indemo partners carefully select the most promising of these discounted debts and bundle them into diversified notes, spreading risk across multiple properties and regions. Through the Indemo platform, you can invest in these notes, gaining exposure to Spanish real estate debt at a substantial discount to face value. When the underlying properties are sold at market value, you receive your share of the profits, typically generating returns of over 26%, according to the platform's track record. The beauty of this approach is that it solves many of the challenges we discussed earlier. So no need to navigate Spanish property laws or handle maintenance issues. Built-in diversification across multiple properties, professional management and execution, access to bank-quality mortgage loans as a collateral, exposure to Spain's appreciation without direct ownership complexity, and two-digit returns in just 18 to 24 months. This aligns greatly with the volatile stock-based portfolios by providing strong returns and relatively lower volatility than direct property speculation. For investors who want serious returns without the traditional real estate headaches, this strategy is worth seriously serious consideration. It's how I'm building my own passive income stream while still having time for the things that matter in life. If you're interested in exploring this strategy further, visit Indemo's website to learn more about how discounted debt investments work and see their current offerings. I've included the link in the description below for you to check it out. Thanks for watching and see you in the next video.